Hey traders, so in this current segment, we'll be taking a deep dive into what premium and discount zones are and how we can better utilize them to trade, to improve our trading. So a premium zone basically is a level above the current market price, which is anywhere from here, anywhere above this current market price, whereas the discount zone is anywhere below the market price. So ideally, of course, we will want to take sales as high as possible as we can. And at the same time, for discount, it's better to buy when price is low as possible. Okay, so how do we apply this when it comes to trading? So of course, when it regards to uptrend, of course, like with the current market price over here, we won't necessarily take buys when it's overextended and all, right? We'll probably wait for price to retrace deep into the discount zone to where it forms a new higher low, and this is where we enter our buy position here. At the same time, when price reach at this level as well, or we won't necessarily enter the price for buys immediately. It's ideally better to wait for price to dip into the discount zone to form another higher low, and this is where we can buy. So with regards to a downtrend, it's the other way around, where when price overextends a sell, we won't necessarily immediately take a sell position here. We'll wait for it to go into a premium zone, dip into a premium zone where price is high, and we'll sell from a new lower high. So likewise, it's the same. Once it gets overextended, we won't take a sell from here, and instead we'll wait for price to retrace on the way to form a new lower high, and this is where we'll take our entries. So of course, the aim of this is basically we want to improve. As traders, we always aim to maximize our risk reward as best as we can, and this also allows us to take better positions or entries as a whole, right? So with that, we'll now go through the real life example in TradingView. Okay, so in this current price action, we can see that, of course, markets in general, they move in factors, right? So let's say like in this current leg, especially when of course there's a very strong up move, a very strong breakout to the upside, which of course even broke this level here, right? What we can do basically is, of course, we shouldn't exactly buy it straight away, right? Because price is currently overextended. We'll tend to wait for pullback to come in, right? So this is probably an alternative, right, of what we can do. We can probably use a Fibonacci retracement tool, and we can wait for price to retrace to form our new lower low. So here's one potential trade. This is another potential trade, basically, right? So let's say if we were to enter in this position at the 61.8, we can potentially put our stop loss behind this demand zone over here to valid up to this level here as well, right? So this will give us about 3R, around 3 risk reward ratio. Or if we want to improve our position, we can wait for it to tap this demand zone. Then this is where we can, of course, enter a buy from here as well, right? So this will give us around 10 risk reward ratio, right? So another thing is that, of course, let's say by this point already, right, structure has indeed broken from here onwards, right? So we can argue that even this here, right, technically this can be a discount zone. This can be a discount zone as well, because like even when price is trending up this leg, we can potentially put our feet and we can potentially enter on this trade as well here. So we probably will cover a demand zone which is all the way there. We can either use the feet lines as our stop loss level or over here as well, right? Then we can target this supply level here, which is give us around for risk reward ratio. So let's say, of course, now when price reaches this order block or supply zone, right? So this is where like price has started to reverse accordingly. So you can like potentially we can ask, right, like over here especially, like could this use this as an order block, and we have bought it here especially. So I wouldn't say that this is a bad idea, but ultimately, of course, right, this is where in a way like the trend has sort of changes, because right, we can see that of course price eventually broke to the downside, and technically this is where structure has been broken here already at this point, right? So price can of course potentially, instead of coming down here, it could potentially come down all the way to this level. But of course, even though this is a demand zone and price did hold for a bit, but technically your immediate trend here was changing already to a bearish side, right? So entering a buy here will be a bit relatively dangerous as a whole, right? So you see that once this demand has been broken here, right, it came back up to retest this level. So this could potentially be a trade here as well, right? Which fall very perfectly at the 78.6 feet retracement zone. So this is another of how premium discount zones could be used as well. Correct. So when price broke structure again, so now this is where the immediate trend is confirmed to be down, because over here there was one break in structure, over here there was another break in structure. So you're just taking on the lower high instead. So you enter an entry here, you could potentially, of course, enter a trade from this zone as well. So we use our feet to draw it to the top over here. So this is where we can potentially take trades from, right? So your take profit can be, you can use these lines here as well. Like I'll probably show my feed numbers later on as to like how the numbers that you guys can follow as well, right? So technically this is where the downtrend was confirmed. Like in the you can take sales from the premium zones, which is here and here. Right? So this is another example, even though right, like you can still use this to trade sales from, but ultimately of course we can see like sometimes it works. Sometimes of course, like let's say example, if we put our entry over here, right, sometimes it works, sometimes it doesn't work, right? Because ultimately we can see that in the midst of price, us letting price run, we can see that there's a shift in the structure and order flow where here there's a change of character around here, and then followed by a break of structure to evoke this internal structure here as well. So the internal structure order flow has become bullish by this point already. So leaving your sell running here is a bit risky as well, right? Like we might want to put at break even. Depends on how you guys manage it. So technically, again, when we notice that structure has changed, internal structure has been changing, again, likewise, we won't immediately take buys right at this level, right? We won't want to enter our buys like right here. It just doesn't make sense, right? Because if we enter it here, we have to put our stop loss here, which will diminish our risk reward ratio as a whole. We will probably want to enter it like wait for retracement for pullback at this demand zone, and this is where we enter our buys, probably to maybe this level here, this supply zone here. Yeah, so this is where this is. I hope like this is showing you the beneficial of premium discount zone, because the aim of the game is as traders is that we want to take better positions and we want to have a better risk reward as far as we can as possible. Basically, when you are choosing a zone, a point to enter, whether is it on a discount or premium, right? You will always need other tools to define your entry, be it the Fibonacci levels or the corresponding demand and supply zones, like where of course you can just put your stop loss behind that zone to cover to make sure that that low is covered. And also another thing to note is that this only works very well when used when angling trends, be it up or downtrend, right? Where on the uptrend you enter on a higher low, whereas for a downtrend you enter on a lower high, right? Is relatively ineffective on ranging markets as a whole, because when you don't have the general direction in mind, it's very difficult to tell whether or not you should buy or sell this product, right? Because price will just be moving around the same area. So with that, yeah, this is the Fibonacci coordinates that I promised that I'll share just now. So you guys can pause the video for a bit to just take down the values that I use. So again, we have come to the end of this current video. I hope that it was relatively insightful. And I hope that you guys can like, share, comment, and subscribe. And stay tuned for our next video.